All right, welcome to Real Talk Office Hours, Hunting for Silver Linings for this Friday, the 31st of July, 2020, hosted today by myself, Corey Hart. We have George Katsanos. We're in West Michigan in the Great Lakes region here in the U.S., and then we have a very special guest, another gentleman from the U.S., from the East Coast, Maryland, the Beltway. We have Chris, is it Haug?
Haug.
Sorry? Haug, okay. Thank you so much for joining us today. We are brought to you overall by Startup Grind, the world's largest startup community. We have 600 plus chapters in over 125 countries, and we operate with a mission to educate, inspire, and connect. And we are driven by three values. That is, make friends, not contacts, help others before you help yourself, and give before you take. This pandemic has been and will continue to be for some time the great global leveler. And as entrepreneurs, we need to do our very best for our teams, our businesses, and our families. And we need to do so by being informed, rational, analytical, and rigorous in our thinking. We should also learn to control our biases as they emerge in various circumstances. Everyone is, of course, invited to join us live every Monday, Wednesday, Friday, as we track the intersection of facts, biases, and action through our review of the global financial markets, alongside check-ins and real talk with Startup Grind chapter directors, entrepreneurs, and ecosystem stakeholders from across the world. And we do this because nobody has a crystal ball, but if we keep our eyes and ears open and pay attention, we may be able to see around the bend, and with some luck, spot the silver linings that are around every cloud. If you do miss the live events, you can always catch the recordings, as most people do, at startupgrind.com/grand-rapids. And now, before I introduce George for a global market update, we're going to get into some housekeeping. Comments made and views expressed by all participants in this podcast are not intended to invite or incite individuals, entrepreneurs, or investors to buy or sell financial assets, real assets, commodities, futures, and or options. The purpose of this podcast is to educate and to inform, not to trade or to invest. If you feel compelled to trade and or invest, please call your broker. Remember, however, risk is everywhere, even when you think that you're not taking a risk. Now, it's my pleasure to introduce George to everyone for the global market update.
Thank you, Corey, and hello to our and the community of entrepreneurs and investors. The purpose of Real Talk is not to provide you with intellectual or otherwise meaningful signals to buy or to sell, because they will leave that up to your brokers and or your platforms, your trading platforms. The single purpose of Real Talk and of the market update is to provide both entrepreneurs and investors with the tools of information about the decision-making process that thousands and millions of more informed people than we are making. In other words, we're trying to see what nuggets of information markets, financial markets in their whole complexity are able to deliver to us on a Monday, Wednesday, and Friday. And let's start by the confusing picture that we received today. Chicago PMI, the Purchasing Managers Index, 551.9 in July, up from 336.6 in June. Remember, please, that a Purchasing Manager Index over 50 is positive news. It means that the purchasing managers are expecting growth. It's logical that the economy in the third quarter of 2020 will move forward in a positive rate compared to what we saw in the first 2 months, in the first 2 quarters of the year. On Thursday, we heard that GDP in Q2 of 2020 here in the US was down by more than 36%, more than 9.5% on an annualized basis, on a year-on-year basis. These were worst results since 1947. And again, the market took it on its stride. That was because we also had the behemoths, Amazon, Google, and so on and so forth, reporting their quarterly results. And at the end of the close of the market yesterday, they all reported earnings of more than 28 billion. Let me refresh your memory. 3 weeks ago, JP Morgan, Citibank, Wells Fargo, and they reported losses of 28 billion. They reported non-performing loans of 28 billion. If you add Bank of America, that is 32. It is interesting in this sense to see the juxtaposition between the financial sector and the high-tech sector that is benefiting significantly from this crisis. The initial manufacturing employment claims rose for the second week, and consumer spending was up, despite the fact that incomes are lower than the previous month. This is definitely a confusing picture. So let's start by looking at currencies. You may recall that we have always said the first area, the first asset class to understand, to feel the pressures of global capital flows are currencies. Let me also suggest that back on the 19th of March of 2020, dollar euro was trading at 1.0692. In other words, if you had €1, you could buy in 1.07 dollars. Today, if you have €1, you can buy close to 1.19 dollars. That is a 12% decline in the value of the dollar within the space of 3 months. This is a major decline, and it is the outcome of, first of all, improving global conditions, at least in relative terms, so investors feel more secure to abandon the safe haven of the dollar and invest elsewhere. However, one more reason for this decline in the value of the dollar is in the monetization of the debt. In other words, the substantial amount of money that the US central bank is printing in response to the pandemic. The third reason is that Senate is going to decide very soon on an additional stimulus package. Worst case scenario, 1 trillion. Best case scenario, 3 trillion. You pick and choose. So the dollar is taking a bit. The yen is strengthening to 1056. The US dollar is trading against sterling at 1.32, as if sterling is becoming a safe haven. My goodness. Let's continue to rates and bonds. Being an old bonds guy, I always recommend that our investors look at what the bond markets are telling us. Looking at the 10-year yield in Asia, we've seen significant underperformance. What do we mean by that? The bond market is not convinced that all this money, all this sloshing around of liquidity is going to end up in, so to speak, in a safe environment. The bond market is concerned about not only return of principal, but the return of principal. In other words, return on principal is one thing if you're successful in making an investment, but having your principal back is even more important. And in that sense, India is comfortably under 6%, South Korea 1.3, Singapore 0.8, Australia 0.8, New Zealand 0.7, and of course Japan stuck at 0. The effect of the yield curve control is palatable in Asia. Japan is doing its best, has been doing its best for the last 5 years to prevent the cost of servicing their debt, which is in excess of 200% of GDP, from skyrocketing. So in that sense, the policy of yield control is positive for the Bank of Japan. Let's see what happens to our part of the world as we go through successive iterations of stimulus packages, more monetary policy guidance from the Federal Reserve, and more loosening. And by the way, for those of you who can't understand what the Federal Reserve is doing because you didn't listen to the last 3 or 4 conferences, the Federal Reserve is backstopping everyone and everything. Ergo, 10-year yields in Germany, minus 0.5. In Switzerland, minus 0.6. Italian yields at 1%. My goodness, the sick man of Europe, 10-year yields at 1%. What the market in Europe is telling us, what the bond market in Europe is telling us is be cautious, be very cautious. We do not see growth anywhere. In fact, the latest numbers of GDP in Europe, we see the highest, the most significant contraction in the history of the European Union. In the second quarter of 2020, the Eurozone economy contracted by 12%. The German, French, Spanish, and Italian economies contracted by 10%, 14%, 18.5%, and 12.4% respectively. Again, the Italian economy declined by 18.5%. Of course, we will have some form of recovery in Q3, but the omens for Europe are not particularly positive. Looking at the Americas, and we look at the high yielders like Mexico and Brazil to start with. Mexico under 6%, Brazil almost 6.5%, the 10-year yield. These are significant signals that investors are hungry for yield. In the US, we're under 0.6. In Canada, we're under 0.5 for the 10-year bonds. Again, concern, no fear of inflation, but concern about going forward. The commodity story is always very interesting to us because we have a combination of commodities like precious metals, we have the energies, we have the grains, and we have industrials like copper. That tells us little bits and pieces of various parts of the commodity complex around us. First of all, the West Texas Intermediate is over $40 again, helped by the fact that the supply is stable and the demand has remained relatively buoyant. Of course, the weakness of the dollar is contributing to most commodities. Remember, commodities prices reflect not only the fundamentals of supply and demand, but also the base, the currency base. In other words, the value of the currency on which they are traded. So with a weaker dollar, we would expect a higher price West Texas Intermediate. And the same with Brent. The Brent is over $43. On the precious metals, gold is trading very close to 2000. In fact, intraday today, gold traded at 2005, from the low of $1971 per ounce to a high of 2005. Again, we think it's likely that dollar will continue to weaken unless there's major shock in the system. And with weakening dollar, gold is going to see higher prices. The two drivers are safe haven in terms of the destruction of monetary value, and of course, concerns about the world economy. In terms of agriculture, I'm sorry, let me go back to copper for a quick second. Copper, relatively stable, around 285, 295. This is the range that we've seen it over the last several weeks. Back on the 8th of June of 2019, copper traded at a high of 330. That was the higher price in the recent 3 or 4 years. Back in March, we saw it traded under $200 per pound. And at the moment, we're seeing it traded at about 288, somewhere in the middle. Again, copper shows, to us at least, that manufacturing activity is slowly recovering around the world, for the most part in China. And we explained last week that China has a vested interest in supporting manufacturing. On the grain side, the grains are facing headwinds. Let me remind you some ballpark numbers. A year ago, corn was trading at $418 a bushel. Today it's $326. Wheat was trading at $580 a bushel. Today it's trading at $528. Soybeans were trading $960 per bushel against $891 today. These discrepancies are due to the absence of the big gorilla in the room in the buying of grains, namely China. At the same time, we have a large crop. The crop seems to be healthy. The crop seems to be significant this year as well. Let's continue over to our equities, and I'll wrap up here. You will see that the picture in Asia has been mixed. The Nikkei was down 2%, 2%. The Australian market was down 2%. New Zealand essentially flat, 0.2% down. China is doing its best to ramp up their economy. The Shenzhen component was up 1.3. Shanghai was 0.7 up, and the Dow Jones Shanghai index was up 0.7. On the other hand, Korea was down 0.8% and India down 0.3%. On the European side, after this dismal GDP effect, the market is trying to have a kind of comeback, although it's facing headwinds. Some economies, like Milan, are just treading water. The same with Belgium. But for the most part, CAC, the French index, is down about 0.5%. The FTSE is down almost 1%. The DAX flat, minus 0.02, nothing really going on. I think the European market is expecting that the stimulus package will provide for some support. And in my mind, this is illusory. But who am I? I'm always cautious on what's going on in Europe. The 750 billion euro package is not going to be a straight line. We know that. We've seen it. Looking at the United States market, at the moment, we see retrenchment. We're seeing that despite the strong opening at the market has come down. Again, there is a lot of concerns, and the equities market has had a huge rally based on liquidity. As people more intelligent than us have said, a good tide lifts all boats. So with this note, I would like to end a very, very interesting week. The signals are as confusing as ever. I always recommend our entrepreneurs and our investors to heed the signals on the market and to listen to more intelligent people than we are, like, for instance, Ray Dalio, like Mohammed El-Arian of PIMCO, and of course, listen to Masters in Business with Barry Ritholtz when he's interviewing some outstanding experts. Back to you, Corey.
Thank you, George, for the recap. It has been an interesting week, and we're just we're stuck here with another pause as we wait for the U.S. to figure out what's happening for millions of our folks over here. As we close out the week, I'm really excited to talk to Chris here from Columbia. Been looking forward to having you with us for a very long time as we've made our way all over the globe: Africa, Asia, Europe, Central, South America, and here we are back and you're basically in our backyard, or we're in yours, between Maryland and Michigan. So, Chris, hello.
Good morning, Corey. How are you?
Perfect. It's nice and sunny here. You had mentioned earlier that a little rainy in your neck of the woods.
Yep.
I think what we love to start and hear about the personal journeys of the chapter directors themselves. Like, what's your origination story? Have you always been entrepreneurial? Is it a virus you caught through family influence, or and then how did you find Startup Grind?
Oh gosh, interesting. Grew up in small town Midwest, Indiana, to be honest with you.
Mm-hmm.
And originally wanted to be a doctor, a general surgeon. Went to Purdue University in West Lafayette. And my pre-med career lasted all of a semester and a half before I said, I'm not spending the next 12 years of my life doing this. And so I looked around, and it just so happened that Purdue had been granted a large block of money to start a bachelor's level program in environmental science and engineering. And I've always had a love for the environment, nature, and protecting the environment. And so I jumped on that and got my bachelor's in that. My first job was as a consulting engineer, primarily down in the oil patch and the refining industry down in South Texas. Was with them for several years. And at the time I was young, I was cheap, and I was very easily transferable.
Mm-hmm.
So that that put me on a path of being transferred a couple of times in less than a year. And the last one was here to the Baltimore area. And was with them for about 2 years. And this was back when we were really in the depths of the migration of manufacturing of all types overseas. In other words, it was the evolution of the Rust Belt. And you guys up there know that intimately. And so I was faced with a situation where my client base was rapidly decreasing, and the competition was not about to let me have any of their business. And I said, wait a minute, why do I keep beating my head against the wall only to turn around with more hands full of brains? So we separated, and I was able to negotiate a package that allowed me a few months to rethink what I wanted to do, and was approached by a friend of mine who had a very, very small concrete subcontracting company, doing less than $1 million a year in revenue. And he wanted to grow the company out of being a subcontractor to being a major general contractor and construction manager in the region. He knew two things. He knew how to sell the company and himself, and he knew how to manage projects. And as he told me many times, I don't know the first damn thing about growing a company's infrastructure, and I need somebody to help me. I thought, this sounds like it might be interesting. So I signed on. And, you're talking to a guy who was trained as a chemist, scientist, and engineer. I didn't know bupkis about building a business. But the end result was that we went from where we were when I started. When I left 7 years later, we had just topped 85 million in annualized revenue. Had become one of the top 25 regional construction managers and general contractors in the region, and I absolutely loved the journey, everything about it. And I said, this is where I'm supposed to be. And so that was my first entrepreneurial venture, even before the word entrepreneur really wasn't part of our day-to-day lexicon.
Right. Now everyone's an entrepreneur. Everyone's a DJ. Yeah. Everyone's a photographer. Everyone's an entrepreneur.
So in one way, shape, or form, I have been involved in business and entrepreneurship since then. I took one additional corporate position with a company that was the largest developer of office space and regional shopping centers. And I managed a $500 million investment fund for them, putting money in new projects, redevelopment, et cetera, et cetera. Then the big real estate crash happened back in 91, 92. Company had to contract. I decided it was time to look for something else. And that's when I decided to go out and start my first venture. And so I've been in the world of startups, emerging, and high growth companies ever since.
Sure. And it sounds like you've also now you have the perspective of being through a few contractions, some a little more severe than others. So when everyone around you is screaming and hollering about the sky on fire, you might be a little outwardly calm, maybe.
Yeah. As a matter of fact, I am.
So, yeah, I think we'll be interested in learning a little bit about what kind of advice you're giving your community, or what kind of questions they're coming to you with. But so when you started Startup Grind, you mentioned that's what, 2017?
Yeah.
Okay. And your ecosystem there is fairly robust already. We do like to ask. I want to kind of move into your ecosystem here for a minute. The sector is primarily in Columbia, Maryland, or the region. Education. What are they?
There are Yeah, there are 8 strategic industries in Maryland. You've got um, biotech, life sciences, health tech, which is huge. Matter of fact, 2 of the companies in Maryland just signed about $3 billion worth of contracts to begin production of the COVID-19 virus or vaccine that is supposedly coming down the pike. And with world-class research facilities like Johns Hopkins, University of Maryland, and with the federal government just down the street from all of us, we're very heavily focused on that. Then you've got IT and cyber. You know, from where I'm sitting right now, I'm 20 miles from the National Security Agency in Fort Meade, which is the cybersecurity hub of the universe. We've got advanced manufacturing, companies like Lockheed Martin, Under Armour is here. We've got obviously military and defense coming out the wazoo. We've got financial services. We've got energy and sustainability, agribusiness and tourism. And those are really the big industries here. And there is an incredible amount of entrepreneurial activity in all of them.
Now, because there's so much going on, is there are there a lot of entrepreneurs that are attracted to the area and they want to be close to all the action, and then they arrive there? Or
that's an interesting question, Corey, and this is one of the big reasons why I decided to start my chapter. And that is that I've known for years that this was a region that had 2x to 3x the raw natural resources that Silicon Valley had at their early stages. The problem here is that we have been a very well-kept secret. We have kind of been a backwater. And one of the reasons is because we haven't been able to get out of our own way and let the good things happen. Being on the East Coast, we have a tendency of being more conservative, more geopolitically siloed, a lot of egos in play. And I said, well, I want to do my small part in helping to break that infrastructure down and really help put Maryland on the map of innovation technology, not to create the next Silicon Valley, but to create our own unique ecosystem. And I would say, and I don't think it has anything to do with me, but I have seen a lot of positive changes in the region in the 4+ years that I have been very actively involved. We are now getting a lot of attention. We are seeing companies that are saying we can't afford the Silicon Valleys or the Austin, Texases anymore. We're looking for someplace new that has more opportunity and lower cost of living. So I believe, if I'm taking the long-term infinite view, we are poised to begin what I would call our explosive growth phase here. Hopefully, once we get through the COVID-19, situation, however that's going to turn out.
That's that's very interesting that you're just now you're like, this is the time to start like really adding the gas to the fire, and recognizing the ability that Startup Grind has to be some connective tissue between some fairly siloed resources throughout the ecosystem. And when we see that here in the Great Lakes as well, where there's a lot of people doing a lot of really great things, a lot of exciting things, some amazing density. But when you want to move from one pond to the other, there's some friction or some challenges there. And that's where the real innovation happens, is when people are like rubbing the elbows, right? So, so now, I'd asked how many people might come into the region. Is there already a pretty robust, like there's a lot of density of population? So do entrepreneurs, are they born out of seeing successes around them as kids and in school, in college? Are the universities pumping out like really talented thinkers that are then curious and start up their own ventures straight out of school? And then they stick around, or do they feel that they have to gotta spread their wings and then come back?
There are several things that our region has going for it. Number one is our state, Maryland, has the highest number of college educated people that have a bachelor's or up. We have all sorts of research institutions where there is all kinds of ongoing research across all segments of industry. We have a relatively low cost of doing business, of living, and people generally want to stay here. The problem in the past has been that companies are formed, they get to a certain size, and they feel like they have to move away, like the Silicon Valley, to follow the money. That's beginning to change. It's interesting to look at our ecosystem and say, just like you said, everybody wants to be an entrepreneur. Okay, that's the kind of the golden ring in today's society, and that's all fine, well, and good. What I find is the successes go back to the fundamentals.
Sure.
It's not that you just want to be an entrepreneur or a startup to be called a startup, etc. It's about people looking around and saying, what problems need to be solved? What is not being addressed? Then working to figure out how that problem or issue can be solved and whether or not a profitable business can be built around it. And those that take that path are the ones that are successful. Those that just think they want to be an entrepreneur or a startup, think they have an idea, don't do the necessary grunt work necessary to prove their thesis and build a foundation. Those are the ones that are going to fail, and it happens time and time and time again. What was I going to say? I lost my train of thought.
That's all right. Where you landed there it brings up an interesting question to me. So in your region, with the robust infrastructure of support, whether that's university, schools, population, obviously, like you said, the majority of the population, largest or smartest population, in your region, college graduates, et cetera, incubators, accelerators, government support, state support, proximity to the purse strings of the U.S. national government, a lot of innovation, defense, all these, 8 industries as compared to like a lot of regions which might have 1 or 2 or 3. Does that mean that there are a higher percentage of successes? So you're talking about, like some of these basic mistakes people make, right, in getting it out, starting a business, but because they're surrounded by so much success, does that mean that there's a higher percentage of success?
Is there a higher percentage of success?
Like a lot of.
I'll answer that with a non-answer of yes and no. There are certain characteristics here that I think will explain the uniqueness of this area beautifully. And that is, here in the DC area, you've got so much incredible advanced research and development across all aspects of business with the federal government. There is it's almost uncalculable the technologies that have been developed, whether it's educational institutions through the federal government, etc. And the federal government is dying to attract entrepreneurs who can take that technology out of the lab, out off of a piece of paper and a patent or IP,
Right.
and commercialize it. The problem that you have is it's a chicken egg, and that is you've got this incredibly talented, highly educated workforce here, creating all this great and beautiful research, but they don't want to become business people.
Sure.
And Corey, I think you know as well as I do, you're talking two completely different skill sets and life sets when you're talking about hard research versus hard business. And so there are just unbelievable opportunities here for people who have some experience, want to take the risk to come in and
Sure.
look at that pipeline and help make the transition from one side to the other.
Sure, that the tech transfer issue, and a lot of universities love that, and I can see where your background is, where you're probably just looking around every day, getting all excited and giddy at the opportunities because you have that you were trained, your brain was trained to think in that science way, and then
Yeah.
you have your deep experience in scaling, growing, and all of those amazing soft skills that are important for entrepreneurs themselves. So
I would like to think, and believe me, it was not by some grand design. As with most things in life, things just happen. But yes, I've been blessed to be given the gift of being highly analytical, but also highly creative. And being able to blend those two and create a set of soft and hard skills that allows me to go in and look at technologies and now I'm never going to be an expert in everything, but I'm able to dig deep within a technology and understand the foundations of it to be able to make some relatively informed decisions that then I can apply to helping a company possibly evaluate whether it's commercializable.
Right, and then you probably, since you have the ability to speak the language of all parties, you have the ability to develop that network and fill in those gaps where you don't have the expertise. So it's a fun, rare place to sit because there's fun things happening all around, right? Now, there are tons of opportunities to get plugged into the ecosystem. Am I correct? Like, if I have an idea, am I forced to bootstrap it and get a certain amount of scale before I can get some legs? And is it important to have a stamp of approval of an incubator or accelerator or a program or a university, or say a recognizable name or a mentor from an area of business? Is there some competition there among ideas and businesses? And then after that, how do I get money?
Okay. Our umbrella organization, there are actually three umbrella organizations. The first is the Maryland Business Innovation Association, which is the trade association for all of the incubators and accelerators in the state, of which we have, I think, right around 25 as we sit here today.
Yeah, I had to scroll on the Facebook, on the page there a little bit because you had so many. I had to scroll on the Google search a little bit because you had so many. Most systems don't have that many.
And places like Johns Hopkins and University of Maryland, the federal government has their own incubator accelerator programs. We've got programs that are focused exclusively on agribusiness, environmental sustainability, et cetera. You've got education and ed tech. You've got biotech focused incubators and accelerators. The one thing that I counsel everybody, whether it's a client or chapter members, and that is, you've got to remember you're always going to have to start the business by bootstrapping. There's just no way around it. You've got to be able to bring your idea and your concept to a point to be able to attract the interest of an incubator or accelerator, or somebody that's got some money. Investors, whether it's the state or whomever, nobody invests in ideas. They invest in people who can execute, and you have to demonstrate somehow that you can execute. That being said, the distance between bootstrapping and beginning to get some outside funding is relatively short here, if you know where to go and who to talk to, okay? There are grant opportunities coming out of the federal government, out of the research institutions here, out of the universities, that are readily available. There are very early stage VCs and investors that will do maybe micro investments to move something along. The schools themselves have taken some of their endowments, and instead of investing it in the stock market, are reinvesting it in companies that are being formed by alumni. So there are a number of different sources. One of the problems that we have here is that all that information is disjointed. And one of my big initiatives over the next 2 years is to work with all of the major stakeholders to bring everything together into a comprehensive, consolidated resource database that helps to eliminate the wandering through the weeds trying to find the right path. So I think we do a lot of things very well here, but there are things that we still suck at. And my philosophy is, matter of fact, with the chapter, is I'm not trying to recreate wheels. My goal is to take what exists and is to take a wheel that exists and then make it into a racing tire.
Sure.
Find the holes, the gaps that need to be filled and focus on those. Why compete with others who may be doing things well when we can collaborate and integrate and create a far bigger pie for everybody?
Yeah, that makes a lot of sense. I think Startup Grind has the unique position in a lot of ecosystems to be that. We certainly see that in the Great Lakes here. There's a lot of really great programming, but just a lot of entrepreneurs don't know how to get started, or they might graduate out of something, but not realize that there's there's another thing. There's the next thing, the next step, the next level of support. Or they might just first walk into it's not necessarily the wrong building, but this person is going, oh yeah, well, we don't really help entrepreneurs until they're about $1 million in revenue. And then the entrepreneur just gives up because they're like, oh, well, I guess I have to have that before I get any help. So now that you've been there for, many years, would you say that you're generally like that pre-accelerator contact? People, they've heard that, oh, you need to talk to Startup Grind. You need to get plugged in with this guy, Chris. And then it sounds like you have a pretty big team too. So you probably have a lot of inbound folks coming your way asking for help.
The answer to the question is yes. And you're right that there are a lot of people out there who say, look, we don't work with anybody that has less than X in revenue or X in EBITDA, etc. And that is a problem. That's part of the myopic, egotistical, siloed thinking that exists, not just here, but exists elsewhere. Okay.
Mhm.
And there, yes, there is a huge, there is the equivalent of the Grand Canyon between point A and getting the attention of some of those other people. And my philosophy is I want to focus on everyone that wants to try to get across that Grand Canyon.
Mhm.
Um, my for my practice, for my company, and for Startup Grind, I want to get in on the ground floor at the time that the idea is just beginning to evolve,
Mhm.
so that hopefully I can use my skills, experience, and those within the chapter to help others not make, many of the stupid human tricks that I've made throughout my career and my
Sure.
life. To make the journey possible, to make it less stressful, and to be the guide that does not really exist right now.
Right. And maybe also shorten the time, because
Yes,
people might not make mistakes, but it might take them 6 months, 2 months, a year to bump into the right to the right person,
yes.
um, or resource. Um, well, it sounds like you're fairly busy then with that kind of activity. I know I've become so, and I've only been doing this since December. So
It has become busy, and the last 5 months have it's exploded. I went through, and the chapter went through that 2.5 to 3 week crisis period
mhm.
where nobody knew what was going to happen. And once people began to think rationally again, and it began to calm down a little bit, things just picked up,
Sure.
immensely.
Well,
And
yeah. So we see that there's like no shortage of deal flow. We see there's no shortage of IPOs. There's no shortage of VCs even like raising funds, um, and sure, like it's not like it was pre-pandemic, but it's still happening. People are still dancing,
oh
um,
yeah,
and I know we're coming up on the hour here, so I want to get to these last couple questions. And since you are so close to all of the action, especially when George is talking about like all of the liquidity that the government is providing the markets, and that's happening all over the globe. Uh, what's the mindset there in your region as far for entrepreneurs? Is it thumbs up? Is it like wait and see? Is it super cautious? Um, anyway, we're no longer in that crisis mode. We're still kind of
within the ecosystem that Startup Grind and you and I and our chapters play. Um, there is what I would call some rather aggressive but cautious optimism.
mm-hmm.
Um, I have not seen the net sentiment fall deeply to the negative. Where things are negative is obviously in all the Main Street businesses that
Right.
had to shut down, have no idea when they're going to open. Um, I despite everything that you're hearing about the dysfunction in Washington, there's going to be something very fundamental that happens, and that is that the federal government is going to do everything that they possibly can, no matter how ugly it may be, to minimize the ongoing impact of where we are.
Mm-hmm.
They're not going to do it perfectly. The politics of it is going to get uglier and uglier and uglier. That's just the nature of politics. But I don't think that the federal government, whether it's us or whether it's any other country, can afford to say, "Oh well, we're in it. We're not going to do anything for you. You're just going to have to fail, and we'll pick up the pieces later."
Right. And this has been really interesting to see in the last few months. And George and I have mentioned this many times on this program, where supply chains are shrinking, as far as manufacturing, agriculture, somewhat, especially on the main street. People are, it's like, okay, well, I'm going to start making clothes, and that's an opportunity. Going to make masks or whatever. Farmers markets are popping up everywhere. People are more interested in understanding the supply chain of their own households now. But so while that's shrinking, the globalization of ideas and innovation is just remarkable to see. Collaboration between regions, states, countries, so when and it's not all in concert, but when we see all the central banks and the governments basically primarily globally saying, hey, we need to approach this in some collective fashion that's not too disjointed. And now, of course, with the topics, all related topics, whether we're talking equity, right? Whether it's gender, race, et cetera, socioeconomic, and then healthcare becoming, like global health policy. Like talking about this more and more, and then energy and the green aspects of the European latest deals. So when, we can look very granular at our own government reactions. So like, say, if you're in Austria and if you're in Tyrol and you're listening to the populist government there, it probably sounds pretty doomy and gloomy. Same thing here in the US, if we're looking at the US politics or whatever. Canada, Brazil, it doesn't matter. But globally, we're having some really great conversations and things are moving really fast. Also, what we're seeing is 10 years of advancements in 3 months, right? And those are also positive things. So I'm with you on the cautious optimism, and I'm curious, I guess, also being so close and having such gravity to the DC purse strings and that policy being written, is how. What is that like to be so close to all that buzz?
Best way I can put it is it's interesting.
It's interesting. That's it. Like by the time we get it in the Midwest here in the Great Lakes, it's been washed one color or the other color,
Okay, and I do keep a close ear on what happened, what's going on intraday. And so there's a certain segment of the news, the information that I might be privy to that, as you said, gets kind of washed on a couple, 3 levels before it gets out to the rest of the country.
Right.
And I will say that right now, all that intraday stuff is kind of ugly. Okay. It really shows some major warts that, that we have. We are going to make it we're going to make it in spite of ourselves. Okay. Number one. Number two is, you said it beautifully, and I'm a firm believer in it, and that is never let a great crisis go to waste. Because it does 2 things. It is a great equalizer, number one, and number two, it opens up universes of opportunity that either people were simply ignoring or chose not to see, or we didn't know even existed. And as you said, taking 10 years into the future and bringing it back into a year or less, that's exciting.
Yeah. Now, so you brought up a really interesting thing for me. That we're seeing a lot of these zombie organizations, and they're being revealed because of the pandemic, right? We all of us, the music stops in some sectors, and people are like, oh well, I guess 4 days of capital is not enough to have in reserves. So, because you have such density there, and the size of these organizations, is that impacting your region in any great way?
The thing about where we are is that if there's a huge downturn or upswing in the economy, we tend to be buffered by the huge presence of the federal government here. That is kind of a steadying influence in this area. So we may not get hit as bad as other parts of the country, but then again, there's also a level of inertia that exists within the federal government that causes things to maybe not ramp up as quickly as they otherwise might if we were someplace else in the country.
Sure.
So there is that buffer, and there's money here. No question about that. It's getting to that money that can be a major challenge, but it's doable. And in many respects, it's exciting to be here because I get to see both sides of the coin. And that gives me perspectives that others may not have the benefit of having because they don't see all the ugly stuff that's going on here or all the good stuff that's going on here. So the information flow is a little jaded sometimes. And I get to sit here and kind of play my own filter, taking all the raw stuff and bringing it down into my own reality.
Right. There might be more stuff to filter, but you're where all the exciting opportunities are. Because
yeah.
By the time they get to me, like I might be picking from a different. The opportunities look a little bit different, smaller.
Yeah.
Well, this has been really insightful, really exciting to hear about your region. Definitely, I learned quite a bit. Also excited to hear a little bit more about your background. The last question that we asked, I told you about earlier before we hit record, the Startup Grind global network of chapter directors and HQ, we're really good at responding when people ask for help. We're really good at asking people like what they need help with. It's kind of like the kids that are the head of the class, and there are a couple of directors that are constantly just innovating within the platform and looking for those opportunities. You're one of those, so people look to you. They always like following you, and they probably don't think to ask, what do you need? So Chris, what do you, or what does Columbia, Maryland need that the larger global Startup Grind community can do for you?
Continuing to evolve the level of collaboration and cooperation that we do pretty well within the Startup Grind global organization now. One of the things that I hope on my list of things to do is to act as an evangelist and activist for continuing to build that. As I've seen in my time here, Startup Grind, we've barely touched the surface. Mm-hmm. We have so much opportunity to have such a positive and strong influence, not just in the ecosystem in which we directly play, but look at us chapter directors and the commitment that we make to our underlying core values and our mission. And the fact that I know I can sit here and I can look you in the eye and know that you and I are operating and we deeply believe and we walk the walk. We don't just talk the talk about, giving first, not taking, helping others before we help ourselves, making friends, not just contacts. We need to take what we do well and take it to 3 or 4 or 5 levels up. So the help that I would be looking for is fellow evangelists just saying, to hell with it, we're going to do it. And if you don't like it, that's fine. You can go elsewhere. If you do, then hop on board because you're more than welcome.
The water's warm.
Yes.
Yeah. That's awesome. Now, from since I gave the analogy of you're kind of at the head of the class, and maybe always forward looking. I can say that the most common thing that people are asking for is more help in collaborating between regions. And specifically what's coming to mind immediately is our chapter director in St. Petersburg, Russia, is putting together a group or a platform where she's trying to, or she will be connecting entrepreneurs, mentors from around the globe to her local like startups. And so maybe think about that if you have anybody in your community that might be looking for mentor roles, since they might have some extra time in their hands right now. But she's someone in particular that is trying to put together a sort of like a group of mentors for her.
I would welcome the opportunity to help her in any way I can.
So, and then I'm hearing a little bit about that from others. So thank you so much for the generosity of your time. Really great to see you again.
Thank you for having me. This has been a great event, and I'm going to take some ideas away from this and apply them to my chapter.
Whatever you need.
You're doing a phenomenal job with this, and I really like the idea. And over the next couple months, you'll see ours ramping up too. We're not going to compete with you. We want to complement and collaborate with you.
There's room for everybody.
There is. There is.
It's great. Well, I'll let you have the rest of your day back. Chris, thanks so much. Have a great weekend. Hopefully the weather clears soon. You can enjoy some sunshine. All right.
And hello to everybody that's watching this, and have a wonderful weekend.
Bye.
Bye-bye. Thanks.